Hello guys and girls and welcome back. It's your boy Big John. That's at the bottom of the screen if you'd like to listen to my music. So is all the relevant information I'll be speaking about in this video. And today what we're going to be doing is going over how to become more of a realistic trader. Now I feel like there's not a lot of people talking about trading psychology on YouTube. There is some here and there, and I get it, people are trying to get this point across, but people need to be making more and more content on this rather than strategies and indicators and fancy things like that, because I feel like a lot of traders struggle with this and they just don't realize that over a period of time, this is when you're going to become long-term consistent. The market will play with you a lot. It will play with your psychology. Trust me, it plays with mine loads of the time. I'm not perfect, but the more and more you speak these type of things into your mind, the better you will become at being more of a realistic trader. With all of that being said, if you'd like to get into the one-time fee VIP service, make sure you click the link above. All the services are explained in there, and this is a one-time fee. The package pricing will go up in future, so do not miss out. This is an amazing package with signals and things like that as well. Let's get straight into the video.
Starting from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.
Okay, so you can see we are in the video at the moment, and I'm going to be using Google Slides just to be able to show us, an explanation of what I'm trying to say here. So it's going to be a bit different from the chart work, but let's just go with it. I hope you stick with me through this one, guys and girls. I feel like this is much more important than a strategy. If you adapt something like this or understand the concepts of what I'm trying to say here, then you can start going into strategy and, of course, risk management. Please do not take anything I'm saying here literally. I'm just going over the facts of what tends to happen in the market. It doesn't mean that there is a right or wrong way to trade. I'm just trying to give you an idea of how people sometimes look at the market. So with the first slide, we're talking about realistic, how to become consistent long term. There are the traders right now. We have Tom, we have Sarah, and we have Jason. The profession that these guys do, this is their working background. Tom is a freelance videographer and his income comes in when he is booked for a job. He has unpaid holidays, is not paid by an employer, so therefore he does not know when his next paycheck will come. He has savings from each job which he uses to invest. Sarah, she is a doctor with full medical care, yearly bonuses, paid holidays, and an inheritance. Jason, he is unemployed, studying how to run a business, trying to keep up with the bills. He also has 2 kids and no savings. Long-term plans. So this is the ideas of what these characters actually do want from their lives going forward, or what they're trying to achieve, or where their mind is at this current moment. Tom, he plans on one day getting into property, but first must invest into businesses in order to grow his net worth. Sarah, she already has 3 properties, a stock portfolio, and is now looking into other investment plans. Jason, he wants to become successful and make a lot of money to just get out of the situation he currently is in. Personalities. Now, this is an important part when it comes to Forex, because the way you trade or the strategy you look for most of the times is governed by your personality. So we're going to see the different personalities that they have and why they pick their certain trading strategy. Tom is the type of person to understand that things take time to grow and he has to keep adding multiple income streams to grow his net worth. Sarah is the type of person that has always believed in playing it safe and planning ahead so that when problems occur, she is prepared for it as much as possible. Jason is the type of person that has always taken risks because he believes that he deserves something great to happen to him due to all of the things that he has been through in his life. Trading type. So this is the type of traders that these people are based on their personalities and where they are in life at the moment. Tom is a day trader. He usually holds positions over a period of multiple sessions using around 1 to 2% risk a trade. Sarah is a swing trader. She usually holds positions for a week or more using around 0.25% to 0.50% risk a trade. Jason is a scalper. He usually enters the market multiple times in one day using anything between 1 to 10% risk per trade. Capital. Tom has a live account with 10,000 capital. So that's a live brokerage account with $10,000 in there. Sarah has 300,000 worth of prop firm account capital. So that's a prop firm account like My Forex Funds, FTMO, or any of the other ones that are out there. If you want to click on my affiliate link below for My Forex Funds to get a prop account, please, it's in the description. Hit that up and it helps me out a lot. Jason has a live account with $250. Compound growth. Now this is my Picasso.
What's this?
It's an art project.
Okay, I like it. Picasso. Yeah, that way.
And this is what we like to call a equity curve. So it's not the best drawing in the world. I do know that, people. It kind of looks like this on FTMO's equity curve. What we're going to do is explain what's going on here. Tom is the one at the top, Sarah's here, and Jason's here. When we go over to Tom's one, we can see that there are sharp lines going down and lines going up. Of course, when the lines go up, they are breaking the lines that are going down, telling us that he's making profit on his account. But then we can see again sharp lines going down, but another sharp line going up. And it continues to do this throughout the period of the year, ending off profitable at the end of the year. Now, when we go into Sarah's equity curve, we've got a nice smooth line going all the way up with short drops in profit at certain times, and then it continues to follow that trajectory all the way up, and at the end of the year she is profitable. Then when we come into Jason, we can see there is a sharp line going all the way up and then a sharp line coming down with a massive explosive line going all the way up, meaning that he was extremely profitable, and then coming all the way back down again. Then he tried to make the profits back, but of course sadly ended up negative and blowing his account at the end. Tom, in 1 year, he was able to grow his account to 11,500, which is 1,500 profit. Sarah, in 1 year, she was able to grow her account to 360,000, which is a profit of 60,000. Jason, in 1 year, he did make 10,000 in 1 month, but is now at 0. So we're going to cover psychology now and the understanding of what they went through in this year of trading in order for them to better themselves for the year going forward. Day trading. The effects of finding a trade and holding the position for a day or so left Tom understanding that the market will sometimes give you fantastic trading opportunities, but not always. So for the year ahead, maybe keeping to the same risk, but making sure each month you increase the capital in your trading account with outside revenue sources equals more possible yearly returns. Psychology for Sarah. Swing trading. The effects of finding trades and holding them for a long period of time left Sarah understanding that you can still make very good profits trading and being busy outside of the Forex market. Keeping to a low risk plan with huge capital helps increase the overall profit outcome at the end of the year. This also helps with stress-free trading, as you are not looking for loads of trades and the chances of becoming emotionally attached to a trade will be a lot smaller. Psychology for Jason. Scalping. The effects of scalping have left Jason understanding that the market is not here to spare a trader or give you favors. Using high risk and entering trades based on emotions will not help you gain long-term profits. Jason understands that huge money can be made within a year in a big burst, but not knowing how to manage this capital will cause you to lose it and have a hard adverse effect on your psychology whilst trading. Summary. There is no wrong or right way to trade. Everything works well once you know how to trade with good risk management. Trading based on emotions and bringing outside problems into the market will only lead to a bad run of trades. If you take your time and grow at a steady pace and invest more into Forex whilst keeping your risk very reasonable, you have a much better chance of becoming profitable and staying profitable within the year. So with all that being said, guys and girls, I'm not telling you that scalping is bad and it will only leave you to this. I'm not saying that day trading is great or swing trading is better. What I am trying to teach you here is that there are certain personalities that come with certain styles of trading, and there's a reason for this. A day trader is somebody that probably is within a profession where they can't look at the charts all the time, but have just enough time maybe at some periods in the day in order for them to take trades based on the 4-hour, the daily chart and stuff like that. And then they're able to hold a position for a couple of sessions or a couple of days. A swing trader is someone that might only look at the charts once or twice a week, maybe even once a month at certain times, take a position and hold it with low risk for a long period of time to make the same type of money as a day trader or a scalper. And a scalper is somebody that will come into the market multiple times within a day. It could be 2 or more times. They usually trade sessions, which would be like London session, New York session, because they're the most volatile. And they're going to look for the best opportunities with a tight stop loss using a decent amount of risk in order for them to, of course, make profits. Now, again, there is nothing wrong with these ways of trading, but they are going to have an effect on you, on your psychology when it comes to trading each one of them in their own way. And you have to decipher what is best for you, what is best for your mental health, what is best for your trading psychology, and what is best for your risk management overall. So I hope this helped you guys and girls. Please don't forget to like, comment, share, subscribe. If you want to get into that one-time fee VIP service, all the information will be in the link below. So will payment links. Don't be a pagan. Just like the video. Come on now, guys. It's your boy Big John, and I'm out. Peace.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.